Do you have any interest in Tesla's growth prospects and future? Hold on tight, because some experts predict that in only 10 years, the electric vehicle firm may be valued at an astounding $4.5 trillion. Yes, you read that right. Gary Black, a mutual fund manager and entrepreneur, is the one making this prediction, despite Tesla's recent failures. Black has remained bullish on the company. However, how is this even possible? How can an automobile manufacturer get to such enormous heights? We'll examine Black's logic and potential contributing elements to Tesla's achievement in this video. So fasten your seatbelts. This may be an unforgettable ride. Please hit the like and subscribe buttons first, though. Introducing Gary Black, a well-known financial leader and investor in the banking and investment management sectors. He is a well-known market and stock analyst who provides knowledge and analysis on a range of financial subjects. Gary Black is a seasoned financial industry specialist with a positive outlook on Tesla's stock price. Despite the recent setbacks faced by the electric vehicle firm, he predicts that it might rise by a factor of 7. For those who are prepared to take a chance, I think Tesla presents a fantastic investment opportunity because of its immense potential. Many investors are keen to find out more about Tesla's prospects for growth and future developments in light of Gary Black's optimistic assessment. According to Black, there is no other way to raise the price of Tesla's shares. You ought to wait for a tweet to show up so that you don't miss this information. Gary Black muted on Ron Barron's latest projection that by the end of the 2020s, Tesla will have a $4.5 trillion valuation. In addition to Gary, American entrepreneur and mutual fund manager Ron Barron has high hopes for Tesla. He is the creator of Barron Capital, an asset management company that manages billion-dollar assets. Barron is well known for his long-term investment methods, which entail purchasing stocks and holding them for a number of years. He is a well-known player in the financial sector and has invested in numerous well-known companies over the years, including Tesla. Additionally, he projects that over the next 10 years, Tesla's stock may increase by 570% or $4.5 trillion. He shares Gary's optimism about Tesla in spite of the company's recent setbacks. Ron Barron is regarded as one of the most successful investors of his generation and has over 50 years of expertise in the financial sector. In addition to his investments in rapidly expanding businesses in a variety of industries such as consumer goods, healthcare, and technology, Barron is well known for his charitable endeavors, which promote the arts, education, and medical research. Tesla's stock value, which was trading for less than $200 per share when this video was recorded, is expected to reach between $500 and $600 per share by 2025, offering a potential gain of 2.5 to 3.5 times in the next 10 years. Predictions indicate that his insights and strategies are highly valued by investors worldwide. It is anticipated that the economy will increase significantly as well, with estimates of $4.5 trillion during that time. According to Barron's bullish forecast for the ensuing 10 years, Tesla will sell 2 million cars annually, a substantial rise above the 1.3 million it sold in 2017. According to Musk's projections, Barron states that by 2030, Tesla would have sold 20 million cars annually at a cost of $50,000 apiece, generating $1 trillion in sales and about $30 billion in operating expenses. Ron Barron and Gary Black arrived at the same assessment of Tesla. Barron forecasted that the company's worth will increase to $4.5 trillion by 2030. With a market price of $30 billion, a P of 30, and a 15% compound annual growth rate PS, Tesla's earnings per share are projected to reach $42 in 2030. The company's market capitalization is already $4.5 trillion at the $1,260 stock price today. But given that Tesla is expected to suffer its worst year ever, a lot of investors are worried about Musk's relationship with Twitter Incorporated and how it might impact the business. Gary Black oversees Future Fund LLC's $50 million worth of Tesla stock. At the moment, Tesla does not have a CEO. The price of Tesla's stock fell by almost 6% in mid-December. During his difficult weekend on Twitter, Musk ridiculed the company's former director of trust and safety, Anthony Fauci, a prominent U.S. government medical expert, and called out people for disclosing their pronouns without being asked. It's no secret that Black draws a lot of inspiration from Warren Buffett, the chairman and CEO of Berkshire Hathaway. According to Warren Buffett, the market behaves like a voting machine in the near term and like a scale in the long run. Tesla's brand is now better. Black brought on board member Hiromichi Mizuno, investor relations director Martin Vicha, and entrepreneur Elon Musk. Early and outspoken Tesla supporter Ross Gerber tweeted his concern to the board of directors, requesting to know who was in charge of running the business on a daily basis. According to Gerber, Tesla is doing well even after Musk left to take a position as CEO of Twitter. He said that Elon's goals will help Tesla and that the business needed a CEO who was dedicated to the position. With Tesla's shares down to $4.31, 2022 will be the company's worst year ever. For months, investors in Tesla have been on edge due to Elon Musk's acquisition of Twitter. At one point, the stock of Tesla had dropped 30%, and many urged the CEO to back out of the acquisition and concentrate on the electric vehicle manufacturer. Subsequently, the stock price declined further as investors distributed their holdings. Across growing prices and a potential economic recession, additionally, Tesla slowed down the rate at which it shipped cars. Since Twitter was acquired in late October, the shares of Tesla has dropped by 28%. Musk stated on December 13th that while he could not alter the course of the economy, Tesla will prosper in the long run. I will make sure that Tesla shareholders get long-term benefits from Twitter, he said. Regarding those tactics, nothing is said. Investors were dismayed when Elon Musk disclosed a week ago that he is still working on SpaceX, the former name for Space Exploration Technologies Corporation, and Tesla. During a July weekend, Musk tweeted that while he remained in charge at Tesla and SpaceX, he was rarely needed because the teams worked so well together. $100 is the estimated consensus estimate for Tesla's EPS in 2030. If profits increase by 15% from 2030 to 2035, a 30x multiple makes sense. Before the August stock split, in 2030, a price of $3,600 would yield a profit of $1,400. Prior to the split, one Tesla share was valued $232. Easy Company's stock price is steady. Thus, it makes sense that a repurchase would occur. Despite having dropped dramatically from $2,032 in July, it is currently well under $200. Gary Black believes that Tesla should buy back its own shares since the company's stock price is too low. Bull and institutional investor Gary Black has said that the current moment is right for a Tesla share buyback. A share repurchase, sometimes referred to as a stock buyback, is a procedure in which the business uses its financial reserves to purchase back from the market a portion of its outstanding shares. This implies that fewer shares are made available for trading to the general public, which lowers the total number of shares that are outstanding. The corporation might take this action for a number of reasons, including to raise the value of its remaining shares, to convey to investors that it thinks the shares are cheap, or to use its extra cash to give shareholders their money back. The company's earnings are distributed among fewer shares following a repurchase, which may raise earnings per share EPS and enhance the appeal of the remaining shares to investors. It's crucial to remember, though, that the choice to repurchase shares may have an effect on other aspects of the business's finances, including debt levels and liquidity. If Twitter and Audio were condemned, the overhang on Tesla shares and purchases would be lessened, and Musk's financial Twitter would benefit. Both firms' stock values would rise. As Black said, they could buy it back after 3 years. Black pointed out that the business had more than enough cash on hand, $18.9 billion and $100 billion in free cash flow coming from earnings over the next 3 years. This was more than enough to fund a $10 billion buyback. This figure accounts for all possible capital expenditures, which could surpass $35 billion in the case of Tesla's high-end initiatives, like its gigabit internet connections, the Optimus robot, and robotaxis. In an open letter to Tesla's board of directors, Black shared his ideas. The business continues by saying that due to its faith in Tesla's management and product concepts, Tesla is the biggest investor in the future fund. Will Gary Black's forecast therefore come to pass? Time will tell. One thing is certain, though the finance industry is constantly evolving and professionals like Gary Black will always have insightful advice to help us make sense of the landscape. The video for today has come to an end. Please share your opinions in the space provided for comments below. Please remember to hit the like and subscribe buttons. We'll see you in the following video.